Hello everyone and welcome into the channel. My name is Brent and in today's video we're going to go ahead and be talking about the market here on April 9th, 2025. Yep, April 9th, 2025. We're going to go ahead and take a look really quickly at the Fear and Greed Index. We're going to go ahead and take a look at the charts this morning. We're going to go over a quick story of a huge mistake I almost made this morning, but quickly resolved and didn't take any downside. So that was very good, but it quickly could have been very bad. We're going to go ahead and talk about the tweet that changed it all. We'll go over some charts of the big moves for the indexes for the day, some individual companies, how they moved on the day. We'll go ahead and take a look at the recovery here as far as charts go. And I believe that is it. If you guys have any questions at any time during the video or would like to have some video topic discussed in the future, let me know down in the comment section below. I do appreciate everyone who drops a comment and watches the video as well. So let's go ahead and get into the video down below. So Fear and Greed Index, as we saw on Monday when I posted my last video, Fear and Greed Index had moved from a 4 to a 6 over the weekend, as on Wednesday we pushed out what our tariff plan was against all countries and towards China. China over the weekend, they had also enacted tariffs against the US of, we were 50%, they came back with 50%, now we're raising it to over 100%. And then we saw the bond market, treasuries were getting sold off, raising rates on Tuesday going into Wednesday. So that was a lot of some fear that was out there that Wednesday, with tariffs being implemented on Wednesday, with the treasury bonds being sold and the yield skyrocketing here. And then after hours, we saw that all indexes were down pretty hard. So if I take a look here at a thread that I shared over on Threads, we saw yesterday Dow Jones was down 0.84, NASDAQ was down 2.15, S&P was down 1.57. Across the board, it was fairly red in every single sector out there. Pre-market going into Wednesday, the S&P was down 1.72. Pre-market, Dow Jones was down 1.61 and the NASDAQ was down 1.58. So across the board, all indexes going into Wednesday was looking really negative, over 1.5%. So my expectations is I woke up very early this morning, 6:15, set my alarm, got up, made myself, started boiling some eggs, made myself tea, came down, sat at my computer, and opened up, I opened up Robinhood for this, but I opened up a short because I expected more downside today. I've been using the ETFs, SPXS and SPXL during intraday to, the market's been very volatile. It can go up or down 3, 6, 9% in any single day. Today, I opened up a short early on SPXS. So early morning, I opened up a short, bought for $10.01. Market started trending upwards, the position started going down. But I figured, with tariffs, the Fed not wanting to adjust rates, tariffs being enacted today, treasury rates rising, treasuries being sold out, rates being higher, that would end up overall negative. But later that morning, I saw a tweet get tweeted out. After the last few days, what I've been doing is monitoring President Trump over on Truth Social. I signed up, downloaded the app on my phone, followed one individual. I'll let you guys guess who it is in the comments, and then I set notifications to pop up. This morning, there was a tweet that came out that said this is a great time to buy 16 hours ago, which would put it at roughly 8 a.m., so an hour and a half after market open. So I saw this tweet and I said, you know what? I'm going to go ahead and close out of my bear position. So as soon as it pulled back up over that initial, I was back in the green a little bit. I closed out of my position right away. And then soon after, what took place, here we had the second tweet that came out. Based on the lack of respect that China has shown the world's market, I am hereby raising tariffs charged against China to United States to 125%, effective immediately. At some point, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable. Controversially, and based on the fact that more than 75 countries have called representatives of the United States to negotiate tariffs, trade, yada, 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 then that I will not retaliate in any shape or way, that they will not retaliate in any shape or way against the United States. I've authorized a 90-day pause and a substantially lowered reciprocal tariff. So instead of getting these high tariff rates of, 10, 15, not 10, but say 20, 30, 40% against these smaller countries, there's still going to be a flat lower rate that was initially posted there across all countries, 10% effective immediately. As of that tweet coming out, we saw the market skyrocket from trending sideways at $500 a share to skyrocketing over a what, just a not even like a 5-10 minute interval. It had shot up over 6%, 7%, 8%, and then it did trend at this point, right? It was, I think it was like high for the day of nearly 11% when I was watching it, or 10%, and then it did trend back down a bit before it closed finally. When it did close, the S&P 500 was up 9.52% today. The NASDAQ was up a whopping 12.16. The Dow Jones was up 7.87%. So huge, huge changes across the board. Now, taking a look at the S&P 500 out there, it was very, very, very green. I've never seen it this green. I've never seen my portfolio skyrocket that much in a single intraday, right? I've seen it grow over a time period, right? Several months, several years in that amount, but in a single day to make that much of a difference, right? The only positions that were really out there, Dollar General, $1.92. Oh, because you know why? They do a lot of their business, a lot of their imports are from China, right? We had Kroger's down 0.81. So overall, right, Microsoft up 10.13, Nvidia 18.72, Apple 15.33, Amazon almost 12%, Google almost 10, Meta almost 15, and Tesla up nearly 23% on the day. So huge boost on the markets. Yeah, huge difference between what was expected here going into today, right? With Fed not making an announcement to cut rates. I think President Trump really want rates to be cut, and then we probably wouldn't have got that tweet if the Fed had actually been like, hey, you know what, we're going to cut 1/4%, 1/2%. Then that in his mind would be like, hey, it's working. We're bringing on the market. They're going to be cutting rates. Our plan is working, right? But it's not. No rates were cut, so had other means, right? Now, taking a look at these companies on the individual level, they're all still trading below their death cross, right? They're still trading below their 50-day, 200-day moving averages. That 200-day moving average is going to be your resistance. You're going to be watching and monitoring. Now the market is moved up over. Initially, S&P 500 was coming down, looking like it was a death cross. Yeah, almost going to be death crossing. Like if we moved any further down into the negative and started trending in this area at $500 piece, $500, the S&P 500 would have death crossed. Right now, we may not get it. We might be able to come back up, go to 574, retest. We'll probably bounce right back off, come back down, maybe not as far as 500. We might come back down to 540. We might come down to 520, but there's going to be some hit and bounce during these uncertain times, right? It's still not certain. There's still tension in the air. There's still tariffs. There's still agreements having to be made. We're still in a trade war with China. There's still uncertainty out there, right? So more than likely, it's going to ride up to 474 over. It still has gaps to follow as well, right? There's been a lot of intraday gaps to the downside. That all needs to be filled. That's all going to be filled here shortly, either on the way up. It's going to go on the way up, right? It's going to hit eventually 574 and hit that wall and resist, come back down. So just expect it. Same thing with the not the Dow Jones, the NASDAQ as well. But let's go back to the individual companies. We had Nvidia popping up from what, $90 to 114. Apple had that huge run up today, very huge run up, down around 175, closed near $200 on Apple. Amazon, not a big run up, right? They were in the like 170s. They came up to 191, so still a really nice move for Amazon. Alphabet, Google, nice run up from 150s into the 160s. Meta, that nice boost there on the day. Meta was my biggest gainer on the day as far as individual, not total equity, but just percentage wise. Meta was up on the day 15%. So Nothing else out there for me went up 15%. So it definitely helped the portfolio over in percentage wise. And then this actually broke above that 200-day moving average, right? It not only broke above that 200-day, but closed above it. So Meta kind of out of the woods here in the short term. This could be really good for them. They could even climb, if they can sustain this going into Thursday, Friday, they probably have a good upwards trajectory for Meta moving forward. Tesla, as we saw, a huge move to the upside today of 22%. So from, as we said in prior videos, right, I was expecting Tesla to fall down to $200. It was kind of on its way, but it seems to have found that bottom here recently of 220. I think it was. Let's see, it's up. I don't know the dollar amount it is up for the day, but it definitely spiked on the day. I did make an article. I thought that this was a really interesting day, so I kind of focused today on that 10 point. When I was looking at the markets, it was 10.5%. And what can a 10.5% do for your portfolio? I've seen a lot of chatter out there as far as investors. They say, hey, I'm blaming this individual for what's going on. I've lost so much money in the market, but no one's actually either made or lost money in the market, right? Your portfolio has appreciated, but you haven't sold anything. So while you've had capital gains that have appreciated, nothing has been sold and nothing was captured in. If you sold, you would have captured those capital gains. And when it's moving back down, which it has been, you haven't really captured those losses either. You still hold your number of shares. So here, the market surged 10.5% in your investment portfolio after having watched the market fall 20%. So if, for example, you have a $10,000 portfolio out there and it shrinks by 20%, you'd be left with $8,000. Now that fear sets in, as it's been sitting in for a lot of investors out there, and you end up selling out of the market, or you stay invested and the market bounces up with that 10.5% surge. That would be nearly $840 gain. You lost $2,000 over that month and a half, but in a single day with that gain of 10.5%, you would have gained from that $2,000 loss $840 back. So I kind of posted what exactly a 10.5% gain can be within your portfolio. I know, man, I thought I turned this off. So here, $100, right? I've seen a lot of people in the investment kind of threads post, I'm down $100, I'm down $1,000, right? Everyone's portfolio is a little bit different. Everyone's a little bit further, or everyone's on a different journey within their personal finance journey, right? So they're at different areas. But I kind of showcased here how much that 10.5% day would be depending on your investment. If you have $10,000 invested, that would be a $50 gain. Oh, $1,050. If you have 20, I was like, what? How is that only 50? Yeah, $50,000. That would be a $5,000 gain, and then some. 100,000 over $10,000 gain. 500,000 would be 52,000, and $1,000,000. You'd have over $105,000 movement on just today alone. But you also have to look at the negative side, right? Those people right now, we were down 20%. So take these percentages and double them to the downside. It's how much their portfolio had moved to the negative in that same time frame. So you don't want, the key takeaways here I want to kind of showcase is that you want to stay invested through the volatility. Once the volatility has already taken place, your portfolio is already down 10%, it's already down 20%. Selling out would realize those capital gains. You still own all those shares, but the moment you click sell, you no longer hold those shares. Those shares are no longer working for you, right? They're no longer working against you, but they're no longer working for you. So that volatility that takes place on these these days where the market moves at 10%, they don't reward the people who are not patient. They reward those long-term investors, those who are staying invested, because if you do end up selling during corrections, you can also miss some of the biggest, strongest days in the market. So I do want to kind of go over that. I did kind of, go over my kind of philosophy here as far as staying just invested. Pain is of selling too soon. So here, I kind of showcase some of the charts this is from the highs of February 19, 2025, up until April 8th, 2025. We saw that the S&P, yeah, the S&P 500 was down 19%. The Dow Jones was down 15.71%, and the Nasdaq was down 22%. For a lot of people, looking at those percentages and seeing, oh wow, I'm down 15, I'm down 19, I'm down 22%, because a lot of investors who are not invested in their individual companies for themselves are generally invested through a Roth 401k, a 401k, right? A work plan of some sort. Those work plans are generally invested into something that is similar to an ETF that tracks the market. It could be a target date fund, is what it's called, right? But you're still going to have similar performances to these indexes. Now, I kind of talk about why dollar cost averaging works, the magic of compounding during downturns and surges, right? During downturns, when you're down 20%, you're buying back more shares. And when you recover, you're not only going to be sitting up buying back more shares, you're not going to only get back to your initial point, but during those downturns, when you were buying back more shares, when it does recover, you'll end up being sitting a little bit higher. Now, here is how the market moved on today. So today the market jumped 10% during the day. That was the QQQ. It's natural to feel an excitement or regret if you ended up selling, depending on your position. If you sold, if you kept in. What matters is consistency, not your reaction. So it's kind of, I just wanted to talk about not being emotional for the market. If you're invested, celebrate the gain. If you're not, let it serve as a reminder to, even if you're starting, just as get started, get invested, don't sell out. You're not investing for the week. You're not investing for the month. You're not investing even for this year, right? You're not retiring this year. I'm not even 40 yet. I still got a long ways to go. So I'm going to be taking cash out of my 401k, IRA, those kinds of plans, right? Without being hit with some sort of a fee and taxes. So, final thoughts, stay invested long term. If you guys have any other sort of specific things, let me know down in the comment section below. But that is what I wanted to share on the day. Right now, after hours is not looking like we're going to keep these capital gains as, all of them that we got on the day. Let me go ahead and load this up. Right now, after hours, it is showing just a little bit to the downside, not a lot right now. Here we see after hours, we saw Dow Jones down just a tick, 0.09%. S&P down 0.34, Nasdaq down 0.7, right? So not bad overall. So there's negotiation talks being out there. The only country that is going to be negatively in the news could be China, right? So we'll see how Thursday plays out. I'm kind of interested to see how it plays out. I'm not going to be playing around with shorts at the moment. If anything, I will probably buy some bulls, right? SPXL, the bull ETF here, popped up almost, it was high for the day. I thought at a high to low, it was up 30% when I was watching on one. It may have been UPRO that I had pulled up earlier instead of this one. Yeah, you can see here from high to lows on open, it's up 31.72%. So on open. So imagine if I had bought that one. Just a little bit. Yeah. Okay. So that is going to be it for today's video. I still wanted to make a video. This one wasn't as put together as all the other ones, but I still wanted to create something out there to kind of record what took place today, just how much a individual tweet can make a difference in today's market. And that's why it is important when you're down, just don't look at the red, just look at your share count. When you're adding money into your portfolio, look at that share value grow. As long as you're invested into a solid ETF, into a solid business that you're believing in for the long term, then the short-term volatility is not going to make any difference long term in your weekly, daily, yearly life, right? It's going to be later on in the future you thanking you for staying invested in the market. So with that said, I do thank you guys for watching. If you stayed till the end, drop a comment down below saying stay to the end, and be sure to go down below, give this video a big old thumbs up and subscribe, and I will see you guys in the next video. Bye bye.